To understand why cryptocurrency prices move, it is useful to focus on underlying drivers rather than short-term fluctuations. Prices in financial markets are not random. They reflect changes in supply, demand, and broader economic conditions. Let's begin with the most fundamental concept. Bitcoin has a fixed supply. This means that price changes are primarily driven by changes in demand. When demand increases, prices tend to rise. When demand decreases, prices tend to fall. Now consider what drives demand. One of the most important factors is liquidity. In 2020, during the global pandemic, central banks increased liquidity significantly. Interest rates were reduced, and capital became more available. In this environment, investors began allocating funds to higher-risk assets, including cryptocurrencies. This contributed to a rapid increase in prices. Now consider a different environment. In 2022, central banks raised interest rates to control inflation. Borrowing costs increased, and liquidity in the system declined. As a result, investors reduced exposure to risk assets. Cryptocurrency prices declined during this period. This illustrates how liquidity conditions influence demand. Now consider another factor: market sentiment. Financial markets are influenced not only by data, but also by expectations and narratives. When positive narratives spread, new participants enter the market. This increases demand and can push prices higher. When sentiment turns negative, participants exit the market. This reduces demand and can accelerate price declines. This creates cycles of expansion and contraction. Now consider a third factor: institutional access and regulation. For example, expectations around Bitcoin exchange-traded funds have influenced market behavior. When investors anticipate broader access to the market, demand can increase even before actual changes occur. This shows how expectations alone can move prices. Now step back and examine the broader pattern. Cryptocurrency markets are influenced by multiple factors simultaneously. Supply is fixed. Demand is variable. Liquidity changes over time. Sentiment shifts rapidly. And external conditions continue to evolve. This combination creates a market that is both dynamic and volatile. In summary, cryptocurrency prices do not move without reason. They respond to identifiable forces. Understanding these forces allows for a more structured interpretation of market behavior. And that perspective is essential for analyzing this asset class over time.